So the market has rallied back as predicted. QQQ broke through the 614 level that I talked about in the last video. Also, VIX has fallen off a cliff down into the 17s. I'm going to talk about the top 4 stocks I'll be buying into December. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, let's take a look at the account. What's cool about this is the account has reached all-time highs. Now, QQQ is still down about 3.5%, and this is why I'm so adamant about selling options. Now, if you want to see me hit my 8-figure goal in this portfolio, make sure to be subscribed to the channel by clicking the subscribe button down below this video. Also, if you get any value out of this video, please hit the thumbs up button for me. I would greatly appreciate that, and I appreciate you being here. So let's go ahead and dive into the realized gain loss for today for transparency. Today, we closed out a lot of cash secured put positions for a nice $3,200 profit. Obviously, results vary day to day, month to month, but I'm not the only one doing it. As you can see here in my private mastermind Options Trading University, we now have 640 members here sharing their inspiration on the day. As you can see here, lots of clients closing out positions going into the holidays. Now, if you want access to my Ryan's Trades and my Leaps Entries and Exits channel, that'll be at the top of the description down below. Also, I do give away free trade ideas on my Instagram, on my new X account, and my free newsletter. I'll be sending out a newsletter tonight, so make sure to be subscribed to that. They're all free. Now, let's go ahead and dive into it, okay? New MIT study finds that AI can replace 11.7% of the US workforce as of now. Are we in an AI bubble, or does this technology actually do what it says? Now, according to the MIT study, this is pretty crazy to see that 11.7% of the workforce can be replaced right now. Also, top of the news, NVIDIA stock falls 4% yesterday on report that Meta will use Google AI chips. So TPUs instead of GPUs to run their AI. Is this bad for NVIDIA? We're gonna talk about that. We're gonna dive into my NVIDIA position and go forward with that. Now, first off the list, we're gonna have a lot of economic data coming out next week. So expect volatility. I am thinking that we could rally up into Friday. Obviously, tomorrow the market's closed. Friday is a half day, but I think we could rally further. But there may be some volatility going into next week and then December 10th with the Fed interest rate decision. So ADP employment comes out next Wednesday, initial jobless claims Thursday, and then Friday is a big one with core PCE data coming out, which is a key inflation measure. So we want to see that come in better than expected. We don't want to see inflation rising. And if that is so, we could see the CME FedWatch tool rate cut odds go even higher. So what is really making this market rally, like I said in the last update video on Monday, is that the odds for a rate cut went significantly up. I think on Monday, they're around 72, 74%. Right now, the rate cut odds for a December rate cut went up to 82.93%. So it's pretty good odds that we might be getting a rate cut for December, which is bullish for the markets. When rates come down, businesses and consumers can borrow at cheaper rates and spend more money, grow their businesses, and that liquidity comes back into the stock market. So that's what we want to see, and that's why I'm continuously bullish for this year and 2026 going forward. Another rate cut potentially in April. So the odds actually shifted from June to April, so sooner rate cuts, and then potentially another one in July or September, or August or September, somewhere around there. So, lots of rate cuts on the way. We want to continue to see these odds going higher. So let's talk about the markets, okay? QQQ broke past this 614 level today, which was kind of a key area. We're currently trading at 615.69. As I'm filming this video, the market still has another couple hours to be open. Bullish on the RSI. It looks like we are starting to head towards the overbought area, but still have quite a ways to run. MACD looks like it's crossing bullish as of now. So these are all bullish sentiment indicators. This is what we want to see in the markets, okay? Rates coming down and bullish sentiment going up, as well as the VIX. If we take a look at the Fear and Volatility Index, this thing is falling off a cliff, typically what we see during a VIX spike. And like I said that if the VIX goes back under 20, That's pretty confident there, right? More confidence and greed coming back into the market. But still, let's take a look at the VIX cash allocation levels. So right now, VIX is trading between 15 and 20 on the lower side of slight fear. So essentially, I could have 20 to 25% cash sitting on the sidelines, ready to take advantage of any upcoming volatility. Right now, I'm following these levels to a T. I have 23% in cash. I cashed up some positions today because we could have some volatility going into the Fed interest rate cut decision. I want to make sure that I can take advantage of that, just like I took advantage of this current dip that we had, right? While most people were very fearful, and I saw it in the comments, a lot of bearish comments, okay? And that's usually an indicator that the bottom is in. We rallied right back up. So this is a pretty good rally here, and we're closing above the 50-day moving average on QQQ, which is exactly what we want to see. So right now, I would say I'm going to gear towards a little bit more caution, having a little bit more cash on the sidelines, just in case, we get another VIX spike next week or the week after, which is a great opportunity to buy the dip, take advantage in a bullish environment. So let's go ahead and dive into the 4 stocks. All right, the first one is going to be NVIDIA. Okay, so NVIDIA, Jensen Huang quickly responded back to the Google news because Google hitting all-time highs, Meta bounced back because of the deal that Meta made with Google. But NVIDIA basically says its GPUs are a generation ahead of Google's AI chips. And I agree, because we have a lot of members in Options Trading University that are in the industry. And basically, TPUs can be used for like basic applications, but for high-level applications and high-level problem solving and thinking, GPUs are always going to be better. So NVIDIA's business is not going to take a hit from this, maybe a small hit, but in the long run, really this play, Google is just feeling some supply issues because NVIDIA Blackwell chips are already sold out. They can't supply enough for the demand that's coming in. Jensen Huang stated that in the past earnings call. So that's typically why we're seeing kind of a run up in Google and kind of a little bit of a pullback in NVIDIA. But that pullback quickly got bought up yesterday. Okay, so NVIDIA hit 169 at one point. Quickly bounced back. Now we're trading in the 180s. So, perfect time to sell puts because it broke below the lower Bollinger Band. Again, Bollinger Bands basically say that, 95% of the time the stock's going to stay within the bands. 5% of the time the stock will breach those bands. And those are perfect times, especially on the lower Bollinger Band, to take advantage of the stock. So what I'm doing here is, let's take a look at the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if we take a look at the account, okay, I actually upped my NVIDIA position. I closed the whole thing for earnings last week, right? And then I put on new positions. So we currently have a smaller position, 50K, and I will allocate more going into next week, maybe if we get a little bit more of a pullback. But I have the 165 and 170 put options, okay, to collect around $1,400. So let's go ahead and dive into the options chain, and I'll show you exactly what I would do today. So I'd go to the December 26th strike, the expiration in 30 days, and I would probably go to the 170s again to pick up $400, which is a 28 delta, meaning it has a 28% chance of me getting a sign if the stock goes below 170 by expiration. And I'd pick up a potential 2.47% ROI in 30 days. Obviously, results vary based off of where the stock's at, but that's a really good return for me. And I like NVIDIA at 170. If we go back to the chart, 170 is below the lower Bollinger Band. So essentially, if the stock did come down there by expiration, I'd get a 6% discount from current prices. I'd be getting it below the lower Bollinger Band. And from all-time highs, I'd be getting a 20%, almost a 20% discount. So that is a pretty good trade there. I like NVIDIA. It's very easy to trade, especially when it kind of trades sideways like this, because every time it kind of comes close to the lower Bollinger Band, I could sell puts, collect my income, it goes back up, and then just kind of do it all over again, rinse and repeat, because I believe NVIDIA is not going to probably breach all-time highs anytime soon, not this year, okay? I think it's going to be more of a kind of a wavy ride, okay? And then maybe next year we breach all-time highs sometime in, February, March, maybe April by next earnings, okay? So I think we're gonna be a little bit flat here for NVIDIA, but a perfect time to take advantage with cash secured puts. So that's NVIDIA. The next stock is Robinhood. So Robinhood basically made a deal with Susquehanna, which is an international derivatives exchange, okay? And basically Susquehanna is going to be the liquidity provider for their prediction markets, okay? So that's exactly what we want to see. They will serve as a liquidity provider, which is essential for price stability in trading. So total addressable market of prediction markets in 2024 was estimated at 1.4 billion globally, okay? Predictions for 2035 is $95 billion globally for prediction markets. And Robinhood is going to take a significant market share of prediction markets. They will basically kind of be a monopoly in this sense of the prediction markets. There are very few competitors, and they're going to own at least 50 to 75% of that market. So we saw Robinhood have quite a jump today. So 10% jump today, and I believe the next area of resistance is going to be this 50-day moving average. So I'm kind of eyeing this 132 area, okay, as an area to get out of the leaps call options that I talked about in previous weeks. I'm still in those, okay? So that's kind of the area I'm eyeing. If we break above that, we're headed back towards this 140 to 142 area. So definitely a key area to watch, because if we break that, we could be headed back to all-time highs on Robinhood. Lots of momentum here, especially in low volume. We're seeing these types of gaps up, which means there's not a lot of sellers in the markets here. We are not even close to being overbought. MACD is crossing bullish, all right? And this stock is still at a 52 PE ratio, which is really good in my eyes, especially with all of the markets that Robinhood is taking advantage of, which is sports betting, prediction markets, crypto, launching their layer 2 blockchain, right? And just, acquiring so many new customers on the platform. So Robinhood, very bullish there. Let's take a look at the portfolio at my Robinhood position, because it's one of the biggest positions. I have 150K in cash secured puts. My 127s were in the money. Now they're not. So I'll probably redeploy that on Friday because they expire on Friday. 130s are in the money. Who knows? Those could be on Friday not in the money. Again, I thought I was going to get assigned on all these shares, and I'm not now. And then my leaps are currently up 3.7%, about $1,500. So right now, on Friday, if I don't get assigned on these 127s, what I'm going to do is go out 30 days, end of December, just, less headache there. And I'm going to go pretty aggressive. I'm probably going to go to the 120 strike. I like that area. I'm fine getting assigned there. I already have 120 put options for December. And basically, I'd pick up $565. It's a potential 5.26% ROI in 30 days. Results vary, obviously, based off where the stock is at. My risk there is if the stock goes below 120 on December 26, I'll be forced to buy 100 shares. But I'm totally fine with that, okay? Because in my view, I see Robinhood hitting new all-time highs early next year, all right? So, and from all-time highs, right? All-time highs, if I picked it up at 120, that's a 22% discount. And then from current prices, that would be about a 5.8% discount. So looking to deploy those on Friday. Very bullish on Robinhood here. Beautiful chart, beautiful fundamentals, really good. They still have billions of dollars in share buybacks that they will be deploying. So that is something that is also bullish and on the table for Robinhood. So that's going to be the second stock I will be adding more of into December. The next one is Hims. So Hims announces a $250 million share repurchase program. The CEO, Andrew Dudum, said, "We continue to see opportunities where the market value of our Class A common stock may not fully reflect what we believe is its intrinsic value. With our strong balance sheets and projected future cash flows, this new program gives us the flexibility to capitalize on those moments and continue delivering value for our shareholders." So wonderful that the CEO came out with that. When we take a look at HIMS, we finally formed that base that I was talking about, like this back here, okay? The longer we can form this base area right now, the better, because there's a lot of short shares. There's a lot of short float right now. And typically what we see is when this stock kind of breaks through up above 40, a lot of those shorts have to cover, which pushes the stock even higher. So I want to see this thing start to break into the 40s before I start adding more, but it's something that I'm looking at actively right now. So if this thing could break above, let's just say 41, I'm fine adding some cash secured puts in the mid 30s on this particular stock. We have been way oversold on the RSI. MACD finally crossed bullish, all right? And yeah, they have a very good growth and market share of the telehealth sector. So that is something I'm eyeing. If we take a look at the portfolio at my current HIMS position, it's very small, 400 shares at $50. And I'm just continuing to collect covered call income. But again, we just broke 38 right now. Let's just say it hits 41 by next week. I'll probably go out to the end of December and pick up something in, you know, the 35 range. I'll probably pick up the 35s with a potential 4.8% ROI there. Results vary based off where the stock's at, but I like that level, considering that the base of the support is really around this 33 area. So taking a close eye on HIMS, not quite jumping in just yet since I already have 400 shares, keeping it small here. I want to see this thing build that base and start heading higher. So that is HIMS. Let's talk about the last stock, which is SoFi. SoFi is one of my favorite in the portfolios. It has been a wonderful stock to run the wheel strategy on, which I talk about on my channel. But really selling cash secured puts here, I haven't been assigned since the tariffs crash because this thing has just been going up and up and up. Now we are kind of at the mid range right here, and I think we could, you know, touch all-time highs again probably by end of year. Okay, PE ratios at 52, MACD's crossing bullish. We're not even overbought on the RSI. So if we take a look at the portfolio, you'll see my current position. We currently have 194K in cash secured puts that expires on Friday. So these will probably all, you know, be close to 100% in profit. So I will take off that profit, which is a total of $5,000. And I will go ahead and redeploy for December 26th, most likely at the 27 strike. So I like 27. That's actually lower than all of the puts I have now. It's really nice because if the stock comes back down below 27 by December 26, I could probably pick up those shares again. So I'm going to sell the 27s, pick up 110 bucks, which is a 4.3% ROI. Results vary based off where the stock's at, but I really like that level. 27 on SoFi is, let's take a look from all-time highs. All right, we're going to go based off all-time highs. 27 is about a 17% discount, okay? And from current prices, that's about a 7% discount. So looking forward to doing that trade on Friday, as I think that next year, by end of next year, I think SoFi could be in the mid 40s to 50s, okay? So I'm expecting it to go all the way up here, especially if it is included into the S&P 500, which is definitely possible. It's even possible in December that SoFi will be included into the S&P 500. I'm not counting on it, but definitely next year, I think they can be included since they meet all the requirements and they are on the list to potentially be added into the S&P 500. With interest rates coming down, SoFi benefits because they are acquiring more customers via student loans, home loans, refinancing, mortgages, that kind of stuff. Because, you know, people like to say, hey, SoFi, you know, I want to refinance my mortgage at a lower rate, or I want to, you know, refinance my student loans at a lower rate. And SoFi is able to come in and help them, bring them into the ecosystem, and then sell them on other products such as high yield savings accounts, SoFi, their recurring revenue platform, their trading platform. So very bullish on SoFi. Actually, at this point, I'm extremely bullish on SoFi because of the potential that I see for this stock to grow. So I hope you enjoyed this update. Give it a thumbs up, and I'll see you in the next one. Take care.